Welcome to the Northbound Wealth Podcast. All opinions expressed by Brent, his co-host, or his guests are solely his own opinions and do not reflect the opinions of Northbound Wealth Management LLC. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, or tax advice, or as a solicitation to offer or to buy any securities. Clients of Northbound Wealth Management LLC may maintain positions in the securities discussed in this podcast.
Hey everybody, welcome to this Monday, April 13th, 2026, Weekly Market Insights with your host, Brent Foster, Northbound Wealth Management. The Standard & Poor's Index rose 3.56% this week in a broad climb ahead of high-stakes peace talks between Iran and the U.S. in Q1 earnings season getting kicked off, while the NASDAQ Composite Index picked up 4.68%. The Dow Jones Industrial Average advanced 3.04%. The MSCI EAFE Index, which tracks developed overseas stock markets, increased 4.52%. Ceasefire optimism. The S&P 500 ended the week at 6,816.89. Its second positive week in a row. The index is up 4.4% for April, racing much of March's 4.6% drop. It is down about 0.4% for the year. A two-week ceasefire reached between the U.S. and Iran early this week appeared to be holding as officials from Washington and Tehran were expected to meet on Saturday in Pakistan, which helped broker the ceasefire. And I believe I saw J.D. Vance and a cohort of people going over there. This week, April 13th, also marks the unofficial start to Q1 earnings reporting season. It is also the tax deadline week for the U.S. tax filers. That's April 15th. U.S. consumer sentiment hit the lowest record this month, reflecting heightened worries about higher prices and overall economic fallout from the Middle East conflict. According to the University of Michigan's preliminary April survey, the survey was largely completed before the announcement of the two-week ceasefire. A report by the Bureau of Labor Statistics showed U.S. consumer inflation accelerated to its highest monthly reading in nearly 4 years in March as the Middle East conflict sent energy prices sharply higher. The data showed energy price growth jumped about 11% sequentially in March, led by a 21% surge in gasoline, accounting for nearly 3/4 of the headline increase. Every sector other than energy rose this week in the stock market. Communication services and consumer discretionary climbed 5.8% each, followed by a 4.8% gain in technology and a 4.7% advance in industrials. Materials were also strong, up 3.5%, while real estate and financials rose more than 2% each. Utilities, consumer staples, and healthcare also edged higher. Amazon was the top performer in the consumer discretionary space, climbing 14%. The company said its Amazon Web Services artificial intelligence revenue run rate was more than $15 billion in Q1 and ascending rapidly. AWS has the potential to grow even faster, Chief Executive Andy Jassy said in a letter to shareholders. Paramount Skydance had the largest percentage increase in communication services, rising 12%. The company's $54 billion bridge loan backing its acquisition of Warner Brothers Discovery, provided by Bank of America, Citigroup, and Apollo Global Management, has been sold down to wider group of banks and reduced to $49 billion, according to a regulatory filing. Intel led the advance in the technology sector, jumping 24%. Intel and Alphabet's Google expanded a multi-year agreement to develop artificial intelligence and cloud infrastructure using Xeon processors and custom infrastructure processing units. Intel's Xeon chips will continue to support Google Cloud systems across AI, inference, and general computing workloads, the companies said. Energy, the lone sector in the red for last week, fell 4.1%. Phillips 66 led the energy sector's drop, sliding 9.6%. As the company said, its Q1 results are expected to be weighed down by a $900 million in mark-to-market losses tied to surging commodity prices, according to preliminary data. The jump in commodity prices also led to a net outflow of almost $3 billion of cash collateral on derivative positions, Phillips 66 said in a regulatory filing. Earnings reports are expected this week from many large companies, including Goldman Sachs, JP Morgan, Johnson & Johnson, Wells Fargo, Citigroup, BlackRock, Bank of America, Morgan Stanley, Progressive, Netflix, Pepsi, Abbott Labs, and Charles Schwab. Economic data will include the March Producer Price Index, as well as existing home sales, import prices, industrial production, and capacity utilization, among other reports. All right, 10-year Treasury notes trading at 4.31%. I want to make sure I cover the bond market there. That is up from a month ago where we were sitting right around 4.15%. But a year ago, we were at 4.40%. So we're actually down about 2% from last year's Treasury, 10-year Treasury note. Again, I just want to touch on inflation a little bit more. The overall CPI rose in March, but a closer look revealed the reason investors were non-pulsed by the results. Headline inflation, that's economists speak for the overall inflation rate, rose 3.8% year over year last month. That was up from 2.4% in February and its highest level since April 2024. But underlying inflation stayed cool. That's because much of the rise in overall inflation was attributed to the 21% spike in gas prices, an outcome many investors expected. So core inflation, which excludes energy and food prices, came in at 2.7% year over year, slightly below expectations. So the only segment of causing a quick inflation spike is in the energy space. Once things get resolved in the Middle East, everyone is expecting that number to come down, especially when you have core CPI, which excludes energy and food, at around 2.7%, which is below expectations again. All right, so key economic data, there's a lot coming out. We're going to be following it. I kind of went over that. Let's go to tax tip of the week. Vacation home rentals. If you receive money for the use of your primary residence, you may have to report this rental income on your tax return. This means that the vacation home rental classification can apply to your home, even if you don't own multiple short-term rental properties. The rental expense deduction is limited in the case of a property used as a home. The rental expenses cannot exceed the rent received. The rental income may not require reporting if you rent the house and to your tenant for fewer than 15 days during the year. A vacation home is a house, apartment, condominium, or other dwelling that you use to generate income, but you can also use it as a residence during the year. For tax purposes, it's critical to divide the expenses of property into personal and business purposes. To report rental income and rental expenses, you use Schedule E. In addition, rental income may be subject to a net investment income tax. This information is not a substitute for individualized tax advice. Please consult with a qualified tax professional to discuss your specific tax issues, and this tip was adapted from irs.gov. Also, one more thing. Finally, taking care of your mental health. So, taking care of your mental health is just as important as your physical health, if not more. Your mental health influences how you communicate with others, how you perform at work, or how you feel about yourself. Here are some tips to help you focus on your mental health and understand what you need to be the best version of yourself. So, start your day off with a coffee or tea or enjoy the warm drink without thinking about what's ahead. Set up a getaway. Even if you don't go far, it could even be camping in your backyard or something like that. I don't know. Maybe take a trip. Think about something in your life that you want to improve and figure out what you can do to take a step in that direction. Learn something new, whether it's a recipe, a song, a poem, or a skill. Show some love to someone in your life. Write a letter, send a text, or give a loved one a phone call. Go off the grid and leave your smartphone at home for a day or a few hours even. Taking a walk. I personally like to woodwork and reading books. This tip was adapted from Mental Health America, and stay tuned for the next segment. Hey everybody, I like to follow Negro Aurora's The Aurora Report, the morning capsule I like to get, and he had some really good points I want to go over about the markets and the Iranian war, thoughts and perspectives that I actually agree with, so I thought I'd share it with you. Basically, the The news of the failure of Iran talks and President Trump's response to blockade the Strait of Hormuz is very muted. On Sunday evening, when futures opened lower, the Momo crowd or momentum crowd aggressively bought the dip. And that's what we're seeing happening today in a positive Monday tape early this morning. And looking at Friday, the volume was even lower on the markets than the recent low volumes on the rally, which indicates a lack of like long-term conviction in the stock market. And the stock market bears are disappointed as they were predicting a much bigger pullback if the Iran talks failed. The Aurora report analysis on the surface, stock market bears logic seems justified, especially since the market rally has been so strong. However, when we look at what happened in the peace talks in the framework of the 8 elements of the let's say, for example, X, Y, and Z axes, there was alignment between Iran and the US. It is the 4 elements of the Z axis where talks failed. So basically, many of the elements did actually line up. And the elements of the Z axis are easy to rectify if both the US and Iran are determined. And I agree that eventually they will be. And that's why you're seeing the reaction in the markets that you do. Investors should consider the Iran talks not as a failure, but as a first step in a multi-step negotiating process. I totally agree with that. This isn't just going to be one talk and that's it. It's going to be ongoing, and they'll finally get to a resolution. And so, in the Aurora report analysis, for the time being, it is now a game of attrition between the U.S. and Iran. Until now, President Trump did everything he could to bring Iran to its knees, with the exception of blockading the Strait of Hormuz. Iran did not have the naval strength to break the blockade, even before the Navy was destroyed during the war. Without oil exports, Iran would have been brought to its knees very quickly. The reason President Trump did not choose the blockade early on is that it would have meant higher gas prices in the U.S. President Trump is focused on keeping gas prices low for American consumers. Higher gas prices risk Republicans losing the midterm election. With an eye on oil prices, President Trump went the other way. He allowed the Iranian oil at sea to be sold, and he gave India an exemption to buy Iranian oil. It's key to note that Iran cannot support its economy without oil exports. In the short term, prudent investors need to know that during the war, Iran exported an average of 1.85 million barrels of crude per day. This is hundreds of thousands of barrels per day more than Iran exported in the prior 3 months. Iran was raking in more cash during the war than before. Now Iran has more cushion than it had before the war started. Now it comes down to who can hang in there longer, the U.S. with rising gas prices and upcoming midterm elections, or Iran with a risk to its economy. Objective, ongoing analysis will make a huge difference to investors and understanding some of these cross currents that are going on from the equity markets and the structure of markets. One to note is supporting the stock market this week will be $30 billion to $40 billion of buying by the CTAs. That's the commodity trading advisors. Okay. CTAs tend to be systematic, algorithmic driven trend followers. They're going to buy because the trend has reversed from negative to positive. And as an aside, I made a note of that several weeks back when I thought that the indicators that I follow and look at were indicating an oversold condition from a momentum standpoint, and it was a potential bottom or a good point to buy. Most CTAs do not analyze the market other than the trend. Okay, that's key to note. The markets always have cross currents. On Friday, U.S. University of Michigan consumer sentiment came in at a 74-year low, the lowest in the history of the survey. NASDAQ 100 is rebalancing, adding SanDisk and Atlassian, and SanDisk will be added prior to the stock market open on April 20th. And we've got earnings seasons that's kicked off, which I mentioned in my lead in to today's weekly market insights. So I think that's relevant to look at. I think he's spot on with that, and I happen to agree. And I've of course got many other thoughts, but not needing to cover them here. If you have questions about your portfolio or your portfolio allocation and want some insights, feel free to reach out to us here at Northbound Wealth Management. We're happy to chat with you. Stay tuned for the next segment. This week's technical analysis spotlight. Just one quick observation. I'm looking at the S&P 500, multiple studies set up here on the SPX, and I've got daily candlesticks, 1-year range, and the 1-year range just so happens to put us back into last year in April when we had the trade war tariff tantrum, when Trump went out and announced all these these tariffs on countries. The stock market really responded negatively to that, selling down at the bottom of that intraday. It looks like it was around 5,100. So the S&P last April was at 5,100. Today we're trading at 6,839. This is Monday, midday, around noon, 1 o'clock. All right. So something to note is 5,100, and then we recently had a sell-off once the Iran-U.S. war took place and was announced. We've been rolling over since, but basically hit nearly 7,000 7,000 intraday high on the S&P 500, sold down to 6,300, and now we're back to 6,800 or almost 6,900. So we recently sold off through the 200-day moving average down to a particular Fibonacci retracement level and pivoted off of that once there was a ceasefire announced, and now we're in negotiations. A very strong rally came out of that. But what's to note, like I said, is 5,100 to 6,300 from last April to this April is like the bottom line trend where we've had bounces, and the top end of the range or the ceiling is 7,000. So we're trading back up towards 7,000. We're getting momentum back up. We're above the 200-day. We reclaimed the 50-day moving average, and that's happened in the from last week to this week. And so the trend reversal happened just about a week ago, at the end of March, early April, maybe a couple of weeks. Over the last couple of weeks, that trend has really reversed itself. So pretty substantial move there. Looking at the charts, that's on a 1-year chart, daily. I've got RSI, MACD, full stochastics, and advanced declines. Not expecting everyone to understand all of that, but at least I'm talking about it, right? I'm tracking this stuff. But if you're interested in technical analysis, which I think people, if you do have an interest, you should get into it. If you don't know, maybe you should look at some charts. Try to pull up an S&P 500 chart. Look at the 50-day moving average. Look at the 200-day moving average. You can go out there on any of the free websites, stuff like that, like Yahoo Finance or Google, or just even type in with artificial intelligence tools. Now you can kind of type in some of these terms or concepts that I'm talking about, and it'll likely get you some sort of chart. It's just part of educating yourself. That's why I talk about this stuff, is because there are patterns in the market and there are opportunities to buy. And so a lot of people are curious, like, well, when should I buy, or why should I panic, or should I not panic? And you really should never panic, especially if you're looking at this stuff. You understand long-term investing is the best way to go. Over the long run, very long run, over decades, it's up and to the right, generally speaking. And so trying to pick areas of entry and good price points to enter the market or move into cash or rebalance. This is how you make an informed decision, and an unbiased one, to remove a lot of the noise that's out there from the pundits on, say, Fox News or CNN or anything like that, or Twitter, or I guess it's X, and TikTok and Instagram and all the social media stuff. It's hard to kind of wrap your head around all of it because we're so over flooded with information. All right. So if you do have an interest in it, check it out. Look at the S&P 500. You could also look at the NASDAQ Composite Index. That's another one that we track here and watch. The Dow Jones is Dow 30. That's 30 Dow Jones Industrial Stocks of only 30 companies in the United States. We also look at international markets and see how they're trading and where they're trading on price points, what those oscillators are doing, and what money flows are doing. You can look at a gold chart, a silver chart. You can go stock specific, look at JP Morgan. You could look at Apple, Amazon, Google, Netflix, CrowdStrike. You could look at Palantir. There's so many things that you could do to look at different positions. And you can do that at Charles Schwab. We custody our assets at Charles Schwab. We're very thankful for them. They do a great job with custody and with their platform that's always improving and advancing from the technological standpoint. Most of our clients look at their portfolios from their phones or their iPads and appreciate a lot of the information that's delivered to them through our custodian. So anyway, I hope you enjoyed this last segment of this week. Until next time, we'll talk to you soon. Like and subscribe, follow, and share. Thank you so much.
Whether you're just getting started as an investor or you're managing a multi-million-dollar portfolio, Northbound Wealth Management has the solution for you. It all starts with building the right financial plan. To speak with a financial planner today, visit northboundwealth.com. Don't forget to check us out on youtube.com at Northbound Wealth. And make sure to leave a rating and review on your favorite podcasting app. Thank you for listening.